Let's bring in Ron Insana. He's a CNBC senior analyst and commentator. He's also a senior advisor to Schroders North America. And Ron, what do you think are going to be the long-term implications here?
You know, Kelly, I've spent a fair amount of time really trying to make sense of what's been going on and just away from the pure inflation argument that we've been having about supply chain disruptions in the post-pandemic environment. I was really caught by something that H.R. McMaster recently said on CNBC, the former national security advisor in the last administration, saying that the world over the last several decades traded global supply chain security for supply chain efficiencies. And now we're finding that we're vulnerable to disruptions of all manner of interruptions, if you will, that could, I think, in some ways change the arc of what we've come to know as globalization, the integration of world economies, the accession of China into the WTO, Russia at one point being part of the G8, now, of course, seeing its most favored nation status revoked. I think we might be in for a secular change in which the way we view the global economy and financial markets as a whole.
Ron, what does it mean if the world goes back to one in which there are spheres of influence or dominant regional powers that do not sort of fuse economically the way gears come together? Sometimes they grind, but for the most part they work. What if that happens? What are the implications?
Well, you know, Tyler, I think that's a subject for a subsequent column, because I haven't really figured out necessarily how one would construct a portfolio or view financial markets in that context. But I think that is where we're going. We spent decades trying to integrate the global economy after World War II, the European Common Market. And then we saw, you know, an expansion of global trade, hemispheric trade zones, global trade agreements, all of those types of things that were designed to not only integrate the global economy, but do so in a way that would prevent future wars. And now we're concerned about what's going on in Russia, Ukraine. We're worried about China's potential designs on Taiwan. And if that fractures, if that splinters, you know, will financial assets, which benefited from global integration, a focus on returns on investment, and the opening of trade routes all around the world, suffer relative, let's say, to real assets? Because if we do deglobalize, if we do bring manufacturing home, as it were, and focus on more regional or local compacts, that would put upward pressure on prices, as we know from the old world order, the world that our parents experienced. And so it's something I'm thinking through, but I do think that what we're going through now is a real test of these longer term trends. And if we fail, we go back in time.
I see what's happening here, Ron. You're going to become an inflation hawk, aren't you?
I'm trying not to, Kelly, because from the pre-pandemic experience, obviously there was zero inflation, even with decent economic growth, right? The pandemic laid bare a lot of vulnerabilities in the system insofar as the supply chain was disrupted. Now, all of a sudden, these relations are fraying in a more dramatic and I think in a quicker fashion than many of us had anticipated. So if, as I say, if that moves forward and this is not merely an interruption, then I wouldn't necessarily say I'm an inflation hawk. You just have to recognize that all the forces that were disinflationary over the last 40 or 50 years will abate and change the composition of both the domestic and global economy.
Yeah, for example, I think an implication of the fact that we're not going to allow, and the West will not allow itself to be so dependent on, for example, China to produce semiconductors, or Taiwan to produce semiconductors, or Russia to produce oil and gas, or you name it, to produce whatever the commodities. That is going to mean probably higher prices. But it's inevitable, or in the case of China, medicines or furniture or anything like that. Right?
Yeah, the only salve here that I think, Tyler, is that we are leaders in automation, and the one disinflationary, you know, element that exists in our future is if we're short labor, if we're short population, and if we're short these agreements, then we're going to have to find ways to automate, to save money, and do more with less in terms of technology. That may at least offset some of those pressures that could be coming down the road.